Hey, bulls and bears, how are we doing? Back with another dose of economic reality. We're going to talk about Capital One. Capital One just reported some pretty eye opening numbers, and it's going to give us a good snapshot on what's happening with the U.S. consumer right now. And we'll get more into that. But first, let's hear from this person giving us their little Subway sandwich experience. Take a listen.
I think this inflation thing's really getting to me. I used to buy one of these things, foot long, back in the day, $6. You know what this cost me now? $11. Mm. All I got was turkey.
$11. All right, let's talk about it, folks. $11 for a Subway sandwich. First of all, she bought the sandwich. If you're looking for prices to come down, if you think prices are too high, then stop buying stuff. Because if everybody continues to buy stuff, even though they think it's too expensive, then prices will never come down. If you stop buying stuff, guess what? Prices will ultimately come down. Now, you may say, well, the stores will go out of business if people don't shop there or people don't buy their sandwiches, Subway, for example. Some stores will go out of business, yes, if you stop shopping there. But guess what? If a lot of stores start going out of business, the owners of these commercial buildings that these businesses occupy, they will have to lower their prices. Look at what's happening with commercial real estate right now. Commercial real estate prices have crashed, especially in some cities like San Francisco. Some areas, some buildings down 50+%. This is called an economic correction. Nothing wrong with an economic correction. When things cost too much, it's okay to have price corrections. I know that may be preaching to the choir here, but there seems to be a lot of people out there that are afraid of price corrections, especially the quote unquote leaders, the powers that be, the mega bankers, all of the above. And I don't mean to just put this on the feet of the consumer, but the consumer is the driver of the economy. And the only reason we haven't seen a big economic downturn right now is because people can continue to borrow money and go further and further and further into debt. Credit card companies are not slashing the credit limits. They're not slashing the credit limits. They did back in 2008, back when the banks first started melting down because of the mortgage crisis. They're not doing that now. So whoever's running this, they're on top of their game right now. They're making sure that this economy keeps chugging along by reinforcing the banks, by reinforcing the credit card companies to keep these credit limits flowing out to people, people like this person that we just heard from, so she can go and buy $11 Subway sandwiches. By the way, the last time I stopped at Subway and got a sandwich, I used a coupon. It was three. A couple reports ago, I talked about that coupon. It was like three for $18, and they raised it to three for $19.50. So the prices are going up even with coupons. So $11. I mean, if you didn't have a coupon, you're going to be paying $33 for three subs. But Subway, man, I felt ripped off one time. I was not eating bread. I stopped eating bread. I was going on this low carb diet thing for a minute. And so I took all the toppings, which are inside the sandwich, not really toppings, but I took all the guts out of the sandwich, all the actual food, anything that wasn't bread, I took out of there. And I think it was like 5 or 6 bites, it was gone. It was like enough to fit in one of my hands. And the rest of it, like 75% of it was bread. I felt ripped off because I didn't eat the bread. So I was on this low carb diet. So I just ate the insides of it and it was gone in like 5 bites. And I had paid whatever it was. Anyways, I felt ripped off. So I don't really eat at Subway anymore. I guess if you really love bread, then go for it. But I really try not to go to Subway unless like my kids are asking for it and I got a coupon, then I will. And I'm not trying to talk like this because I'm cheap. I just feel like if everybody continues to overpay for everything, prices will never come down. We've got to be discretionary somewhat in our spending. Use coupons. If something costs too much, look for a cheaper alternative. If you keep on paying top price for everything, these businesses are never going to lower their prices. There's a simple solution for this: supply and demand. Stop buying it, and prices will come down. All right. So let's get into some other news here. Most of you know this, but I just get frustrated sometimes at the way that people consume. Oh, by the way, if I look wet, I am. Walking to my garage, I got drenched. It's raining outside, and my recording studio is here in my garage. So I just wanted to explain the the wet spots here on me. Let's talk about Capital One. Capital One profits dropped on higher credit losses. So even though people are getting behind on their payments on their credit cards, and we're seeing more charge-offs, not a huge amount, but definitely charge-offs are on the uptick where people just stop paying their credit card payments. Um, Capital One's feeling the pinch, and there's an FDIC charge to cover some of these failed banks. All right, so let's talk about it. Let's go ahead and get into this article a little bit here. It's got some good numbers in here for us. High borrowing costs have increased the risk. More customers not being able to repay their credit card debt, obviously, which is among the costliest types of loans. Yeah, 21%, I would say that's costly. And the debt, by the way, it's over $1 trillion. It's $1.05 trillion. When the latest quarterly numbers come out, I fully expect it to be about 1.2 trillion. We'll have to see. Lenders are responding by strengthening their buffer against such risks. Capital One boosted its provisions for credit losses to 2.86 billion from 2.42 billion a year earlier. So they're buffering for future credit losses. Warren Buffett, by the way, has a big stake in Capital One. Let's see here. There was a $289 million charge related to replenishing the FDIC Deposit Insurance Fund, which was drained of 16 billion after the Silicon Valley Bank failed last year, and Capital One had to chip in on that, as well as lots of other institutions and banks. Net income, here we go. Net income fell to $706 million, which was $1.67 per share, and that's down from 1.23 billion a year earlier. So from 1.23 billion to 706 million. Obviously, they're still doing okay. 706 million, not bad, right? For the 3-month quarter, but down from 1.23 billion. That's a pretty big reduction. All right, I've crunched the numbers on that, and that's down 42%. Now, the fee that they had to pay, they call it a fee, a charge of 289 million. So let's say 300 million. Even without that charge, they would have still had a pretty big drop. It would have went down to about a billion. So from 1.23 billion down to about a billion, if they would not have had to pay that, if they wouldn't have had to pay that charge, which was 289 million, to chip in on the bank rescue for the failed banks. So they're still doing okay, but it is a pretty big drop. And it's interesting because they made more in net interest income because the higher interest rates, more people carrying higher balances. Net income on interest climbed 4%, but yet profits were still down. That's because the charge-offs are increasing. And it was actually not easy to find this article. I've got this news feed that's supposed to screen specifically for news like this, earnings reports, credit card profits, bank profits, etc. Someone actually sent this to me, and if it weren't for that person sending this into me, I would have missed this article about Capital One. So thank you very much to the person that sent that in to me. I really appreciate it. All right, folks, we're going to wrap this one up here. What do you think about the Subway sandwich ordeal? The person paying $11. Shouldn't we just stop buying overpriced stuff? Look at all the people that took out these massive car loans. It was I think I read 15% of all car loans out there now are $1,000 per month for a car loan. And that's one of the reasons why so many car dealers didn't cut their prices. People were just willing to take on loans, regardless of how high the loans were, regardless of how much over the sticker price you were going. And we saw vehicle prices really zoom upward, and they're starting to come down now, but people are still paying for overpriced cars. Even right now, I think cars are still overpriced. But sometimes you have to do it. You have to get the work. A lot of people are trapped, and maybe that's why we're not seeing prices come down and correct. That plus all the credit that's being issued out there, with the banks being liquefied and funded, because the powers that be, they know that's the key to keeping their jobs and to keep this whole economy from imploding. All right, everybody, I'm gonna wrap it up. What do you think about this? Please let me know down in the comments. We'll talk to you very soon. Next time, bye.